Hey everybody, what is up? Welcome back to Final Trade. It's that time again to take a 6-month look at Pokemon long-term box price performance off of TCG Player. And so every time I do this, every 6 months, we come back and we look again at just how consistent the Pokemon performance has been year over year over year over year. And we've done this all the way going back to 2022. That's when I started making these videos every 6 months, and I'm going to keep doing them. What we do is we assume that you had to buy these boxes on release day for $100. Now, the reality is most of these boxes were not $100 at wholesale, and there were a lot of these boxes that you could buy at certain times in their life cycle at below wholesale, some of them. And so saying that you had to buy them on release day, which is the absolute earliest you could possibly tie up your money and thus lower the overall growth results the most, and saying you had to pay $100, those both make the results even more conservative. I've taken these pricing data off of TCG Player on April 7th, 2025. When I do the calculations, I assume you have to pay a 12.5% selling fee to get rid of the box. And what I do when I go on TCG Player, I look for a market price first, because a market price on TCG Player is a trailing average of actual sales. If there is no market price, because there hasn't been a sale recently enough for TCG Player's criteria to produce a market price, then I say, okay, well, what is the lowest ask price currently up there? If there was no market data and I'm having to use the lowest ask price, I've highlighted it yellow. And if there were none for sale at all, I've highlighted it red. Now, I also have in green here, I have Pokemon Center, meaning they're available for sale at MSRP on Pokemon Center. Right now, in 2025, there are 0 of these boxes of anything available on Pokemon Center because of all of the recent hysteria and the inability of Pokemon USA to print fast enough to satisfy the market. So, going all the way back to the black and white era of 2011 to 2013, I have the release dates for the various boxes. I have the prices according to the criteria that I've spelled out a minute ago here, and then I calculate the compound annual growth rate. And what that means is that if you paid that $100 on release day and you held it until April 7th, 2025, you sold it for $2,800, you paid a 12.5% selling fee on the final price, then what you would have achieved, the profit you would have made at the end of all of that, would be equivalent to having increased that $100 initial cost by 25.7% compounding per year in between the day you bought it and the day it sold. And all the equations are set up for partial years. They don't just measure full years. And so the nice thing that we always love about compound annual growth rate is that it gives you that level line compounding rate of an investment return. And so it is truly an apples to apples comparison, regardless of how much you paid for something, how much you sold it for, or how long you held it. And so that's why we love CAGR. And then what I've done is, after I've computed the CAGR for each of these products, I go through and I just take a simple average of them. And it's not exactly correct to take simple averages of CAGRs, but just for reference, it's an okay way to do the mathematics. It's not the exact correct way, but it's good enough. Then what I've done is I've said, okay, within this era, what was the best performing products CAGR? Well, 49.3% in the black and white era of 2011 to 2013. And so in case we want to cut out the outlier of best one, I go ahead and determine the second best one, and the same on the worst side. The worst performing one returned 25.7% compound annual growth rate, and the second worst was 32.6% compound annual growth rate. And so what we see in here is, just like we've done this analysis 4 times in the past, compound annual growth rates in the 30 to 40% range for most of these, for these very old boxes. The average coming out to 37%. So if you had simply bought equal amounts of all of these expansions, booster boxes on the release day for $100, you paid 12.5% selling fee, and you sold them on April 7th, 2025, on average, you would have made about 37% compound annual growth rate. And where to put that, how to contextualize that? Well, the S&P 500 returns somewhere around 8 to 10 to 12% per year. Its compound annual growth rate is 8 to 10 to 12%, depending on how exactly you measure it. There are different rationales for how you should measure it, whether you include dividends or not, whether the dividends are reinvested or not, things like that. And so maybe 12% if you take the highest one. Well, Pokemon boxes from this era return on average 37%. And remember that it's compounding. And so the effect of it over a long period of time is even more pronounced than just 37%. So we'll move on into the XY era. We have all of our XY booster boxes. We have the release dates. And for all of these, we had market prices on TCG Player, meaning there were enough sales within TCG Player's criteria time length in order for them to compute a market value. And the CAGRs that we compute here, we have a low of 17.4% and a high of 42%. The average of all of them coming to 28.4%. And again, if you want to take the highest and lowest, call them outliers and throw them out, then the range was between 24.5% and 36.8% compound annual growth rate for the XY era. For the Sun and Moon era, all the same calculations, we get CAGRs in between 13.9 and 78.8. Yes, the Team Up booster box, $4,100 market price. So this means there were actually sales going on in that price range for TCG Player to compute that kind of market price for it. Second best, if you eliminate the outliers, takes it to 16.9% to 57.1% with an average of 36% compound annual growth rate. And our beloved Sword and Shield era, of course, Evolving Skies still just absolutely wrecking things, 96.4%. And remember, Sword and Shield is in a bear market right now. And Evolving Skies has still returned 96.4% return per year compounding since it came out. The average for Sword and Shield era, 36.3%. And if we get rid of the outliers, the range is 12.9% to 61.2%. Also, the last time I did this analysis 6 months ago, there were still 3 of these boxes available on Pokemon Center. Of course, that was Vivid Voltage, Battle Styles, and Silver Tempest. And now all 3 of those have gone out of stock on Pokemon Center. So Silver Tempest has flown up to a 43% CAGR since then. And Vivid Voltage and Battle Styles are still holding as the 2 lowest performers of the Sword and Shield era because they just most recently went out of stock at MSRP pricing. And so again, what we see, like we see every time with this analysis, is nothing is fundamentally changing. Pokemon is still producing incredible returns, and this is a bear market. And it's producing these kind of returns into a bear market. And when I look back at the data from these analyses, every 6 months that I've done them, originally I only did this analysis once a year, but then I started doing it every 6 months. What I see is that the most important number, this average, which is what you would kind of expect to get if you buy similar amounts of every expansion, because you won't know when you buy what kind of return each individual expansion will get. Well, those values aren't changing considerably over time. They're bouncing around a little bit in small ranges, but averages for entire Pokemon eras of boxes are still between 25 to 35 kind of percent in that kind of range consistently every 6 months when we update this analysis. So when you hear someone say that, you know, markets don't work like this, it was never meant to be this way, it can't go on, and all of that, and Pokemon isn't an investment, and everything else, I have no idea what those people are talking about. I seriously have no clue what it is they mean by those statements, because we've been doing these analyses on Pokemon boxes going back to the black and white era over a decade ago. This box came out 14 years ago. and its return has been 25.7%. These are scarce collectibles, as I always love to say, that people destroy for fun. They open these boxes and they destroy them for fun. And so we should expect that over time, the price performance will be very good. And if in fact, for the people who say that, well, there's just too many boxes and closets, they'll always come out, they'll always satisfy the demand for eternity, there will never be a shortage of these boxes. Well, where are they? Because Sword and Shield era boxes are producing 36.3% average compound annual growth rate for the 12 booster boxes of the Sword and Shield era. Where are the closets full of boxes that are always going to spill out onto the market and prevent prices from rising? Because it's just flat not happening. One more thing that I always do in this analysis is I show this plot, and basically I'm just plotting the individual compound annual growth rates of each box against its release day to see if there's any type of interesting change over time happening. And all that I think I can see in this plot is that the volatility is increasing. And you kind of expect that. You expect the volatility to be higher on the more recent expansions, the more recent releases, because eventually the market will kind of settle down on them. Eventually, sales of the boxes will become more and more rare. Eventually, the population of boxes will get smaller and smaller, and the prices will solidify more as time goes on. And so I don't really think that has anything to do with the long-term outlook for Pokemon. I don't think that if you just kind of imagine a generally upward sloping average line through this part of the plot, I don't think that means that returns are getting even better on Pokemon as time goes on. I think it's just a natural reflection of the volatility of the prices of these products while they're still not old. So, like I say, guys, we're going to keep doing this analysis every 6 months as time goes on, as we go through bear markets and bull markets, cycle after cycle. And maybe one day we'll figure out what people actually mean when they say this can't go on forever and markets aren't meant to work like this and it was never meant to be this way. Because as I like to point out, markets do not have a state of meant to be. Markets aren't meant to be anyway. Markets are a reflection of the push and pull between buyers and sellers, between ask price and bid price, between supply and demand. And that's all markets are. The last sale price is simply a reflection of where a buyer and seller met and agreed on a price. Markets do not have a state of meant to be that can be violated. And these are the objective measured data on long-term Pokemon box price performance. Let me know what you think, everybody. Thanks to everyone who makes this content possible, especially my very generous supporters on Patreon. Like, comment, share, and subscribe, and join me on Final Trade.